The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the April 23rd, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, a daily investment newsletter service that is the intelligence for creating your financial freedom. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs, what I like to call the three forces of life. You know, the three forces of life, they're knowledge, their time, and their effort. Force number one, knowledge. You know, today, most of us will have 3 meals and a few snacks. We'll feed our body. But the question is, are we or have we fed our mind? On average, how much money do you think folks spend a day on things like Starbucks and sodas and candy and cigarette snacks? You think it's $5, $10, $15? How about setting aside, say, $10 to $15 a day for an educational fund for your mind? You know, for books, for seminars, for video, for newsletters. My service, Mastering Probability, can cost you as little as $3 a day. $3 a day. Less than it cost you for a gallon of gas out there and many other things in life out there, folks. What you always want to do is you want to get a constant flow of ideas and certainly want to get inspiration out there. Remember, the best money spent is money to be spent to cultivate the genius of your own mind. No better way to do that than go over to the homepage at TFNN.com. Take advantage of our Tiger Dollar promotion is out there. That way you get 25% on your money out there. So do that. Don't delay out there. Feed your mind, folks, at least 30 minutes a day. That money is a small price to pay for the promise of unlimited potential. Force number two in time, and the force number two in life is time, right? Because knowledge takes time, and time is simply what? It's simply irreplaceable. Now, there's 2 ways to acquire knowledge. We can do it by trial and error, or we can hire a coach, we can hire an expert, someone that can teach us shortcuts, someone that can compress decades into days. I don't know about you. I've done them both. And I know the one that works easiest, quickest, fastest, and we're all about speed, aren't we? It's not trial and error. Because in the end, trial and error usually costs you more in time and money. Look, I would never ask you to do something I've not already done. So I can tell you, go out and hire the best coaches for whatever areas of your life that you are trying to work on, that you're trying to master out there. You'll find you will get there in a quicker and less costly way. Force number 3, well, that's what we call effort. And there's a huge difference between casual learning and serious learning. And effort, that's the investment that will end up opening up the floodgates to all of your ideas. If you put in the effort, guess what? Light bulbs will go off. So remember, always spend the money, the time, and the effort to achieve your outcomes. These are the investments that will turn on your lights. They will sharpen your focus, and they will start turning your wishes into reality. Let's go check out the reality of the markets here right now. The Dow is trading off 32 points, down about 0.2%. S&P off 5, trading out at 1874, off 0.25%. NASDAQ composite down 0.7%. It's off 29 points. Russell 2000 off about 7 points, down 0.6%. New York Stock Exchange off 0.2%. It's not really budging a whole lot. Net declining issues out here as we speak right now. Come on, work with me. Would you work with me? It's my little computer here, down about 171 net declining issues. Not a big deal out there. In order for the bears to take control of the market, you would need to see 1,760 or more net declining issues today. I just don't see it. What I do see is what I'm looking at the charts here. I do see, and what we should expect is we should expect some kind of little pullback, some type of pullback. Now, whether it's a 1 day, whether it's a 2 day, that much I don't know. But if we do take a look, just take a look at if you're watching us on Tiger TV, we're looking at the Dow chart right now. And so we'll take a look at the strength in the market, the Dow and the S&P, same thing. And if we take a look at coming off the February 5th low out here, the February 5th low, that led to 1, 2, 3, 4 days of advancing price. What have we seen here this time coming off our low? 1, 2, 3. I guess in the Dow you saw 3 days. Because then we had a little bit of a pause, 2 more days, a little bit of a pause out here. Really looking a lot like coming off of those lows here in February, and I suspect that that's really what we have going on. Why? Well, number one, inside of the Dow, we had a nice little Gartley buy pattern. So you had a nice big move. We've had a couple moves up in the Dow, certainly coming off of the October 2013 lows. The damage that was done in the market by the NASDAQ didn't really touch the Dow. All it did in the Dow was just created a Gartley buy pattern that was confirmed with a nice bullish engulfing bull sash candle. That was on April 14th. Some follow-through on that very next trading session on April the 15th. Right now, the Dow is trading into the swing point high from April 14th, the low of which is 16,392. All it's doing here today is just pausing. It's running a bit of a marathon. You run a marathon, you run a race out there. You just simply pull over to the side, you grab some water, you grab some 5-hour energy bars. Maybe this is just a 6.5-hour energy bar, and we see a bit of a pullback. Volume on the way up has been light. Maybe this is a little pullback here that we should see today, tomorrow. Will just simply also be light volume, and then that will just confuse you, won't it? In this case here, the key level to be watching for inside of the Dow, certainly the swing point high of April the 4th, 16,631.63. When price gets above that, and yes, I do believe that price is going to get above that, and we're going to see a heck of a rally out here. The question's going to be, if we take a look at a couple different potential patterns or potential expansion patterns. Like first, if you go from December 31st high down to the low that was put in back in February, just put things in perspective, that was quite a move down compared to this last one that we saw, right? We take a look at expansions. 1.272 takes you up to about 16,927. So I would say if and when the Dow gets above 16,632, then 16,927 would be next on its mark. But what we cannot ignore is the potential of this A to B equals CD to the upside that actually takes price to 17,309, and that is what is the current patterns inside of the Dow. We'll know more as we see what happens as price takes on that 16,631.63. I do suspect that we are going to see that occur out here. That's what's going on inside the Dow. If we take a look at the S&P 500, here's a chart. I shared this with clients a while back. And now this chart here that we're looking at, you don't see this too often. If you're watching this on Tiger TV, all you see are just little dots. And these are not about connecting the dots. These are actual market closes. So these are closes for the S&P 500. And in the course of from the time period here from about December 23rd, really through, we'll call it, through today, you'll see that there's a huge cluster of closes inside this box. Now, what my thoughts were, because this has acted as a really good, now, when you see a cluster of, again, this is only looking at closes, not looking at opens, not looking at intraday out here. It just told you that there was a good range out here of where traders were comfortable. They were comfortable with regard to price. And that could get very uncomfortable once you would see a break, in essence, this case here, as the market was pulling back, once we saw a break below that. Well, that was on April the 11th. And it looked like once we saw a break below that, then all of a sudden the Dixie Stampede would be running for the doors. But we didn't see that. In fact, right now, we're well above that box, that little cluster area. Let's switch over to a candlestick chart that you're more used to seeing and interpreting out here. And in the case of the S&P 500, this was, 1, 2, 3, 4, 5, 6 up days in a row. Hey, the day's not over. Today could end an up day for all we know as well out here. But nothing more than just a little bit of a pause button as we speak right now, as the S&P decides to try to go ahead and take on its highs out at that 1897 level, 1897.28. The S&P gets above that. It, too, could be setting up an A to B equals CD to the upside out here. What does that A to B equals C to the upside look like? We go down from the lows on February 5th up to the highs out here on April the 4th, down to the lows on April 11th. Your 1-to-1 A to B equals CD to the upside. That would take you into the area of about 1975 out there. And if, in fact, the S&P closes above 1897.28. There is no reason for that not to occur. Nice movement off of this C point today, right now, as we speak. Nothing more than just a little pause button on its continued move up. But, of course, it first needs to take out the swing point from April the 4th out there. I suspect this is the pattern that is actually unfolding inside of the S&P 500. Higher price even moving into May Day out there, May 1st, the sell in May cycle out here. But, look, we will just simply take things one day at a time, one chapter at a time, one page at a time. But that is the page that I'm seeing inside of the marketplace right now. Where's the weakness coming from? It's coming from the NDX 100. We took a look at the Qs earlier. The Qs are going to show a little different channel lines than the NDX is, simply because of you've got dividends and so forth. In this case here, the Qs, they're still trading inside this most recent swing point out here from April the 9th. Didn't get all the way up to the top of 3602.35. This will probably be the most telling thing, is going to be taking a look at the NDX 100 and the Qs on this little pullback here. If we do see a pullback and it's on light volume, that'll be sending a huge signal. That'll be sending a signal, at least to me, that guess what Stevie was showing you as the A to B equals CD upside pattern inside the Dow, inside of the S&P 500, inside the New York Stock Exchange, that is what likely will unfold. On the other hand, we start seeing some heavier volume corrections to the downside. Then that will be saying, you know what, we still got this war going on between the NASDAQ and perhaps Russell 2000. We haven't looked at that this morning, versus the New York Stock Exchange versus the S&P versus the Dow out here. And I'm not sure who's going to win that battle. But we'll get a feel for what's going on as we take a look at today's action and volume action. Not necessarily so early right now with only 45 minutes or so, 48 minutes of trading out here. Let's take a look at some of the other indexes. Let's just stay with inside these sectors here. Let's take a look at the SOX index. SOX index right now, let's take a look at its retracements. This thing here so far, let's pull this back. Nice little hammer candle that it formed. Boy, nice hammer candle. I didn't notice that. That was the April 16th session out here. A gap up on the following day. That's bullish. If we take a look at retracements thus far, so this too could be setting up an A to B equals CD to the upside out there. Above the 0.618, trying to get to that 0.786 area to about 592.26. Just a little pause button candle as we are taking a look at it right now inside the charts. The SOX want to get up to the 601.40 area. If it takes out 601.40, that becomes and it does it with volume, that becomes a huge A to B equals CD pattern to the upside here. But this bottom is a fairly significant bottom up here inside the SOX. Why do I say that? Hey, you had March 3rd's date. That was the Vladimir Putin move to the downside. Lasted for one day. You saw the market take off topside, wide price spread out there that was on March the 4th. Remember, on that price spread, make sure to fill in those gaps. That gap qualifies as a wide-ranging bar to the upside. Price just simply came back during this most recent correction and did what? It came back to a breakout area. Not only did it come back to a breakout area, it came back to a breakout area. The cavalry came in. They created that hammer candle, and then it gapped up again. 877-927-6648. Dow's off 20, S&P down 3. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is down 12. S&P's off about 2 points right now. And on my screen here, our man Z in the Den brings this chart out every now and then. That's the Wilshire 5000 out here. So if we want to get a better feel as to what the overall market is doing versus, some of the, more weighted issues with inside an index like in the NDX 100, right? You got Google, Apple, and friends, that, are heavily weighted inside there, inside the Dow. What you've got IBM, you've got Visa or what have you. You start taking a look at the New York Stock Exchange, which, by the way, today, right now, has got 252 net advancing issues, not declining issues, net advancing issues out here. It tells you just how strong this the liquidity in this market is, how strong this market is, and in my opinion, what we're going to see is a huge rally. We've seen a significant bottom in the marketplace. Absolutely. That's what the stock charts are telling me right now. And that's all I'm going to do is read these stock charts one day at a time. If you know me well enough, you know that I am willing to change my opinion as soon as the market gives us some other information. Well, if we take a look at the Wilshire 5000. I'm going to come off of, first I've got a trend line that I've drawn on my screen out here, and this is off of the scary lows, and they were scary lows. This is when Europe was falling apart. If you go back into the October time frame there, that's when they came out with the marketing plan that, where they were going to fund that, I forget the name of that vehicle, the European Financial Stability Fund. Wasn't that the ES? I think that's what the name of it was. Of course, they came out with the vehicle. They forgot one thing. They never funded it. But you know what? It's all really about emotion, market interpretation, and what's going on. And that's really what candlesticks, that's what patterns can really do for each of us inside the marketplace out here. Now, coming off of that low, back on October 4th, 2011. If I just use as my next touch point out here, that would be the time period of June of 2012, June 4th, 2012. I don't remember that scary event that was going on, but there was one. I remember that Tom, myself, we did a workshop over at the in downtown Tampa at the where was it at? It might have been at the Sheraton there. In any event, I'm just going to use that touch point. You don't really care what I was doing on June 4th, I don't think. You can see that this last move down here never even got down to touch that level. But what's really more important is if you take a look at these little V-shape, these little victory shape areas, these bottoms that are put out here. We now have enough information here to see that this is a very significant, another V-shaped formation. Last time that we saw that formation form most recently was at the February 5th lows out here. And in February, we saw the same kind of thing. We saw big movements down with volume inside some of the indexes out here. Nonetheless, the market was able to crawl its way up, get above the highs that were established in January, and then do what? Make an expansion. And they were able to make an expansion here. If we come from the swing point high inside the Wilshire 5000, from about the 19,776 level down to the low that was put in out here on February 5th, they were able to make a little bit more than a 1.272 expansion. I suspect that's really what we're going to see take place this go-round as well. Now, there's other V-shaped formations out here. There's this one that took place here from September 19, 2013, down to lows on October the 10th out here. Let's go take a look at that. That turned into, obviously, quite a much larger expansion. This did about it did the 1 to 1.618 before it started to take a pause and make a little bit of a lower low out there. There's a V-shape. Here's another one. If we go back a little bit further, let's take a look at from the highs here on May 22nd. So sell in May 22nd, 2013. That was May 22nd, I said, 2013, right? I didn't say May 1st. So maybe this rally here that we're in lasts us until the middle to third week in May, something like that. And if you take a look at going from that swing point high to the swing point low. Now, what I want to tell you, folks, is that I haven't done this on this chart here. I rarely do I actually look at this chart. That doesn't mean I shouldn't. It just means that rarely I pull it up on the screen out here. No, the V shapes that we're looking at, the expansions of swing points, I didn't do this ahead of time. This is why understanding Fibonacci expansion, contraction, is extremely helpful to us. Well, if you go from that high down to low put in on June 25th, 2013, you'll see that what it made before it then began to pull back and made a 1.272 expansion. The 18,168 number was the projection. It got up to 18,157. You got to love that. Missed it by, 11 points as far as the high out there? You got to love it. So we've got another V-shape that has formed. Looks much like the previous ones that we just looked at. So what should be our expectation here? I'd have to say our expectation is that we see another expansion. That expansion here ought to take us up to where? Probably the 1.272 level. It says the Wilshire 5000 probably wants to trade up to 20,526 during this nice big bullish move, nice big bottom that was put in here back at the lows here just about a week ago or so. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Darryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back. Dow is off 14 points. S&P down 3. Composite, the leader in the clubhouse, on the way down about 0.6% right now, off 24 points. The NASDAQ, the Qs, or take a look at the ETF structure here. They're the ones that have got the largest hurdle to overcome. Its descending price channel. That's what it is. That's what it traded into yesterday as we were going into the close of the session out here. Let's start off. Let's take a look at the SPYs, having an inside day as we speak right now. Yesterday, the SPYs moving up with 85 million shares. Of course, inside the swing point high from April the 4th, it's got 169 million shares. Coming in there with light volume, most certainly. But the SPYs are going to go test 189.70. So far this morning, we've been trading for an hour. Volume to the downside, about 20 million shares out there. I guess that volume, though, is likely not going to keep up that same pace out here. In fact, if I switch this over to the 30-minute chart, let's just go see what's going on a 30-minute chart out here on the SPYs. Let's see. We had 10 o'clock. There was 7 million shares, so 9 million shares coming in that 10:30 session out here. But we're only 5 minutes into the new one. Well, we'll try to remind me. We'll take a look at what this next 30-minute session has to offer inside of the SPY out here. What we can see on the 30-minute chart is that the pullback this morning inside the SPY made the 0.618 retracement off of its swing point from 1 o'clock in the afternoon on April the 21st, a couple of days ago. Almost looks like a little hammer candle that was formed on that 30-minute chart. Let's take a look at the I lost everything. I didn't want to do that. Oh, well. I did it. It's done with. Not much that I can do about that. So the SPYs here getting a much-needed rest as we speak right now. Inside day would be a likely outcome, a little bit lower, close, somewhere around here, wherever it is, a much-needed rest as it tries to get the energy to not just take out the high from April 4th, well, not just take on the high from April 4th, but actually take it out, and then we start to see the expansion to the upside as we were looking at in some of those other charts out there. We take a look at the diamonds. Let's go see what the diamonds are doing right now. They're trading out at 164.69. Volume yesterday inside the diamonds as they pushed higher, upward and onward into the April 4th high of 166.06, where there's 10.5 million shares. Yesterday up with 4 million shares. Very light volume trading session yesterday. Of course, we're still into a holiday week out here. You got a lot of folks in the north that are off for vacation this week. I saw a lot of Detroit shirts, Tiger shirts, Red Wing shirts, things like that yesterday as I was doing a little bit of walking around. So I know that the snowbirds are still down here in the deep south, and that's a beautiful thing. So we're just seeing a bit of a move sideways out here before the spies go take on that 166.06 level. If we take a look at the IWM has been following suit with the Qs here as one of your weak indices. They're above the 0.382 retracement level. Their next target is going to be 116.03. If we take a look at the descending price channel line, that's the red line on my screen out here. That's going to be their hurdle that they are going to have to overcome, and they'll probably get their Q from the Qs out there. How's that for a nice little move into taking a look at the Qs chart? What were the Qs here doing yesterday? The Qs moving up right into that descending price channel. That becomes their hurdle. Volume yesterday, 38 million shares. Today so far, 11 million shares to the downside. They have tested the top of this little gap. They gapped up on April 22nd out here. The bottom of that was 86.84. That's the high from April 21st. The low so far, 86.85 today. Again, just unless volume picks up to the downside, just a much-needed rest, and that's going to be the key as what happens. We'll watch to see when the Qs break this descending price channel, then do they come back, test it, reject it, and then start moving higher? Well, if that's the case, what we'll see inside the Qs, we go from swing point high to swing point low. You'll see them take on the 88.26 area, and then 89.61. That would be the 0.786 retracement level for the Qs. But by the time they get up there, we'll have a nice bullish exponential moving average crossover out there, and that ought to set up the move all the way up to the highs, 91.33, and that is inside the QQQ ETF out here. If we go take a look at some of the sectors, let's put up the Rhodes Momentum Indicator charts out here. Let's take a look at this. And by doing this, let's take a look at each of the sectors. Let's try to go find some messages that we have out here. Give me a moment. I want to switch to another tab on one of my tools out here. Let's take a look. Let's start with the number one sector, technology sector, XLK. Trading off 29 cents today, down about 0.8%. Let's go check out candlestick formation. Let's go see what we have here. Now, the top portion of the chart that you're looking at is the weekly chart. The bottom portion of the chart is the daily chart out here. So it'll give us a feel as to what's going on. I'll pull this back here first on the weekly chart. Come on, baby, work with me. Oh, man. I hate that. Okay. If we take a look at the weekly chart, I pulled this back pretty far here. You can see the weekly chart. Well, let me get my crosshair out here. It'll be a little bit easier. The weekly chart, if you go back to January of 2013, got a nice big bullish crossover, moving average crossover. You actually got a nice buy signal that took place inside of the XLK, that buy signal coming in November 24th, 2012. On the weekly basis here, this has remained in bullish mode. Remained in bullish mode. So the number one weighting structure with inside the S&P 500 on its weekly chart is still in bullish mode. Now you see the yellow-colored signals on my screen out here. It says, caution. And that caution sign just says that what the XLK needs to do in order to then turn bullish is to get above the high from the week of March 7, 2014. That high is 36.65. Once it gets above that, then all of a sudden we see price move into a nice little buy signal. That's on the weekly chart, longer-term time frame out here. So right now it's just in a little bit of a cautionary mode. If we take a look at what's going on the daily chart out here, come on, work with me. There we go. The daily chart, pull it back, make it a little bit easier for you to take a look at it. What we know is that price over the last couple of days has got above the 200-day exponential moving average. When price is below the 200 exponential moving average, money managers start to get a little bit concerned and frightened out there. That level's at 35.93. So far this morning, we've seen a test of that area to the T, 35.93. That level has acted as support. I suspect we'll see 35.93 continue, or the 200-day exponential moving average continue to act as support. So that's the number one weighting structure inside of the S&P 500. Let's look at number 2, XLF. That's actually up 1 penny today. So we've got a flat session, but it is up just ever so slightly, trading out right now at $22 and a penny out here. What do we have going on? Well, it's up above its 200-day exponential moving average on the daily chart. The weekly chart, really the same kind of a thing out here. It's just in that cautionary mode. In order to, on the weekly chart, for it to get bullish, it needs to get above the week ended March 10th, 2014. That high out there is $22.49. Right now you're trading at $22 and a penny or so out here. It's got a shooting star on the weekly basis, April 7th. That becomes a bit of resistance there, $22.55. So clearing $22.55 on the XLF. And then she's got freedom to run to the upside. That's looking at the weekly chart out there. So weekly, just a little cautious. Daily chart. And if we take a look at this little hammer candle, nice hammer candle that formed back here, April the 10th, 2014 on the weekly base, you can see that hammer candle, in essence, was tested. The high of the hammer candle was tested. The high on February 10th, 2014, on hammer candle is really a reversal signal. That high, 2131. Volume out there was 298 million shares. That was tested with 297 million shares. And that was when the markets were moving down. That was the weekend of April 11th. So pull back, testing the hammer, which is a swing point on slightly lighter volume out there. Nothing wrong with the XLF as we speak right now. The health sector, the XLV, third weighting structure inside of the S&P 500. Let's go see what it is doing as we speak right now. It's trading out at 57.97. It, too, like the XLK, looks like it came back and tested its 200-day exponential moving average. That number is 57.67. It got down this morning to 57.71 out here. It has also, so very similar cautionary sign on the weekly chart. It's going to need to just simply, in order to get back to a buy mode out here inside the health sector, it just needs to close this week above, or any point, could be next week, 58.36 is the number. It's trading at 57.97. It's already been above that this week. So if on Friday, this health sector, the XLV, closes above 58.36, that'll switch to a buy mode on a weekly chart out here. But nothing really has broken down. It does have some resistance. Its highest point of resistance right now ends up being that little bearish engulfing candle from the week of March 15th. Because it engulfed the prior session, that says resistance is really the high of the prior week, March 8th. So its next area of resistance is going to be 60.50 once it clears the buy point out here from the week ended April the 12th out at 58.36. It should find some resistance out there at the highs from April the 8th. Let's take a look at the XLY. That is the fourth weighting structure inside of the S&P 500. Then we'll get to the XLE next. The XLY is trying to give a buy signal on the weekly chart. All it needs to do is to close above the level of 64.74 at the end of this week. Now, it is a little bit weaker than the first three sectors that we took a look at. Its head is bumping up against the 200-day exponential moving average on its daily chart. So that's where it's got a little bit of work to. It's cut out for, it looks like 64.69. So far this morning, it got up to 64.67. Getting above that, that would be nice and bullish out here. Let's take a look at the energy sector, the XLE. This has been on fire. This has been in a nice, strong momentum move to the upside. I'd like to see the market pull back, and then you could jump all over this one. But the XLE has just said, hey, I'm off to the races out here. Now, the XLE, the energy sector, this thing is in strong bullish mode on both the weekly, when it comes to who's in control, buyers or sellers, on both the weekly and the daily charts out here. So there's nothing bearish about these stock charts out here, not from a momentum standpoint. So there's no resistance. all we can do is take a look at expansions of swing points to identify maybe some price targets out here. But the energy sector, on fire. Absolutely on fire. XLP, let's take a look at the XLP. Let's go see what this sector is doing right now. It's up 2 pennies. It's up about, it's flat, right? However, what it is doing, it's now moving into the strong bullish mode. Why do we say that? It's up above its resistance of the shooting star from April the 14th. That high is 43.63. You're at 43.65. Okay, so 2 pennies above it. Hey, it's above resistance. That's the only resistance that it has in its stock chart out here. That is bullish. That's super bullish, actually, is the terminology on both the daily and the weekly time frames out here. So not so. Are you hearing me now? So again, I got some emails yesterday because people said, hey, how can you be so bullish? And I just want to make sure that you understand that all I'm doing is reading the message of the markets. This has nothing to do with me or my personal opinions. And you know what? All of you guys that wrote emails into me and told me about the horrible things going on with the economy, all of the debt, everything going on in Russia, the light volume on the move up, so on and so on. You're right. You absolutely are right about all of those things. And in fact, I agree with you on all of those things. But those things, to a certain extent, don't have anything to do with what's going on with regard to the price action that we're looking at inside the markets and the price patterns that are going on inside the markets. And doing this show, really, other than giving you my mental philosophies on life and how to overcome things, which I think is very key, because this game that we're playing here of money management, just to show you how important it is, all of those other factors are noise. They're just noise that get in the way if your outcome and your objective is to trade from a technical standpoint. Then there are a number of tools that you want to be able to put in your craftsman toolbox out there. And if you're a guy, who doesn't like those big red toolboxes out here, right? You got to have those big red. When you pull into your garage, if you've got one of those and you got your tools all organized, don't you feel good about that? That's a guy thing. A guy's got to have that, and they've got to have a cave out there. And all you women, you got to understand that we're just guys. We got to have those things out there. And so what you want to do is you've got to get rid of all of that noise. Oftentimes people will ask me, they say, what's the most important thing that if you were to pass on advice, so for me it becomes pretty easy because of the advice that I pass on to my kids. And that is this: when it comes to trading and when it comes to technical analysis of a stock market, it is to totally do one thing and only one thing. And Larry Pesavento hit it on the head. He's got the ultimate title of a book, and it is called Trade What You See. Just simply trade what you see. And the most important thing that you can do there is just to realize that the market in a stock chart is doing nothing than telling us a story. If you want to learn that story, you want to learn to interpret it, learn candlestick charting. That's one of the first places that you can start, because that's the bulls and the bears showing up for work each and every day. And recognize that all of these are just elements of what it is that we take a look at out here. If you want to invest fundamentally, then stay in the fundamental stuff and don't even listen to the technical stuff that I talked to you about. But technical information is the most fundamental element of any stock chart. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is flat right now. S&P is flat. We can go barefoot water skiing and have a bunch of fun. The composite, that's a leader in the clubhouse on the way down. It's off 17 points. Russell 2000, it too is flat. It's off a point right now. And so, the only other real recommendation, is really trade what you see when you take a look at stock charts and make sure, look, whether you're a guy or girl, I just make fun of myself, I suppose, with regard to the big red toolboxes. With all the ratchet sets and wrenches and screwdrivers and, you name it out there. But when you take a look at the toolboxes for trading, I love TFNN. Love TFNN. Take a look at all of the different tools that we have to use to be able to learn, to put into our arsenal out here. And so when my clients and I, when we went long, the NASDAQ, I was using a multiple set of those tools out there. A to B equals CD patterns. Our man Basil Chapman, he's up next for the next hour. I used part of the Chapman Wave on this tool here on the Ensign software. I've been building this little peak and trough counter out here. I'll show you how it works. I just simply go to the, in this case here, was counting the waves on the wave down out here. And if we take a look at the March 7th high, that was the high inside the Qs. That was out at 91.36 out here. I'll start there. That starts my counts to the downside out here. It makes that fourth little trough. That was back on the session of April 7th, but that really didn't give a whole lot of information, at least for me, in order to take a long position. There was no real signal or anything. There was a potential signal the following day, but where I saw the real signal was when the market here did two things. Number one, it made that sixth out of 7th potential waves, right, that you can have. And as it was doing that, the Qs were doing what? They were coming down. In essence, they were testing the 200-period exponential moving average. They were testing a couple of swing points, the Ben Bernanke day from December 18th, the trading session from February 5th. They were coming down with volume. That's the whole key. Inside the Qs, they were coming down with volume, and the Qs make lows with volume. So I'm sitting here saying, wait a minute. So we're making a 6 out of 7th trough, right? Not a peak, in case I said that. Coming down with volume, and I know that the Qs make volume with lows. I know that blows people's mind, but go test it out yourself. Go check it out. It does out there. And we had a key reversal session. I didn't know until the session was over that, we were in pretty good shape because we took a trade intraday out there. On April 15th, we were looking at a 120-minute chart when I was taking that trade, but then we got a key reversal session out here. And then what did price do? Price has gotten right up to where it should before it runs into resistance. I sent out an update to my clients yesterday. I said, okay, we've been long the Qs by a TQQQ. If you are a conservative trader, now is a good time to take your 9.6%, 9.7% profit because the Qs are likely going to stall here. We've had, 5 up days in a row. We're up against resistance out there. And I said, so if you're a conservative trader, time to take that profit off the table, good profit off the table. I am not, because I believe that the market is going to break out to the upside. That's what I see going on inside the New York Stock Exchange, inside of the S&P, inside of now, and as I took a look at this morning, the Wilshire 5,000, inside of the Dow out here. And so therefore, I think the Qs will be able to take out this rising price channel. Now, I don't know if they will or they won't, but here was that second recommendation. To a certain extent, if they don't, okay, I've just made less money. This is a game about making money. You have to understand where you're at with that. Use stops on both sides of the trades. See, I've got an exit here on the upside as well. And the market can take me out either the upside or the downside. And if you do that, folks, you will survive this game. So just trade what you see and stay tuned because our man Basil Chapman is up next. Larry will not be able to be with us today till we can trade what he sees out there. But we've got Daryl Martin. We've got David White, the Tom O'Brien Show from 4 to 6. Thanks so much for being here. Hey, folks, don't forget, get over to the homepage at TFNN.com. Go sign up for Tiger Dollars. Use that. Feed your mind, and life will be beautiful. Take care, folks. See you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.